Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with this range where we are then looking for a WXY with the end of Y being the end of a wave A or a wave 4. In a bullish scenario, you want this to be the end of a wave 4, where then we're looking for a 5-wave impulsive structure to the upside in a 1, 2, 3, 4, 5. And in a bearish scenario, we're looking at this as a wave A, then eventually a wave B for a bigger flat with a wave C towards the downside. However, this is where my beautiful design here comes into play, right? We are looking for 3 or 5 waves to the upside in this particular scenario. However, you can see that over here, price has already grabbed the liquidity that was resting above this range. People that had their stop losses up here got stopped out, and the breakout traders, well, they're in a loss already. So what is the value of moving back towards the upside for another B and then another C towards the downside? Meaning, the fact that price here already grabbed the liquidity and had a sharp move to the downside increases the probabilities that if price takes this high, we're going to be looking for a 5-wave impulsive structure to the upside for higher prices to come. The only problem with this scenario at the moment though is that on the lower time frames, it's not easy to count this structure here as a nice impulsive move to the upside in either 5 waves or a potential diagonal, which does lower the probabilities a bit for this particular scenario, as it looks 3-wavy instead of a 5-wavy, but that increases the probabilities of this scenario, however, where we are also still looking for a WXY scenario, where here wave Y takes more time to form as well, which works a little bit better with the length in time of this W, with W being a flat, X complex, and Y a triangle. The fib times that you see on the chart are taken from the beginning to the end of W and then put on top of X to compare W with Y. And you can see we're currently ranging after the 0.618, which is fine as well for a wave Y. Now here we are then looking for a triangle A, B, and eventually just a continuation of the range, but we don't want to see this low take, and it's no problem to go up and down in this space, but eventually you want to see price moving to the upside without taking this low. And then the final scenario here is the scenario where we are taking the low. In this particular scenario, this high is not the high of a corrective structure in a wave B or a wave X, but now this is the end of a wave 5, and we are looking for a bigger corrective structure to the downside. Now in this particular scenario, we are then looking here for potential WXY, and I prefer a WXY over a potential ABC for the reasons mentioned over here, where if we look for an A, B, and C, then what is the value of grabbing the liquidity again, as we already took that liquidity, right? So in this scenario, I would then prefer W and then a zigzag, then an X, and eventually a wave Y to the downside, and then a flat or potentially a triangle, where in this case, we could then be looking for a much bigger structure in an A, B, C. Again, I'm not too big of a fan of a potential B to the upside and another C to the downside, because we already had something similar, but at least it is something that we keep in mind. If we look at the CVD divergences, then from the low over here, price is building bullish CVD divergences, but keep an eye on the red line. Don't be mistaken by zooming out on the CVD and only look at the bullish CVD divergences, because locally we also have bearish ones. If we zoom out over here, then you can see that we have higher lows on price, but look at yellow over here, right? Lower lows on the CVD. Yellow is basically tanking. That's a bullish CVD divergence, but locally, yellow is also showing bearish CVD divergences. We have 2 little order blocks here on the 15-minute, lower high on price, but on yellow, higher high on the CVD, and also here more locally, right? Lower highs on price, higher high on the CVD. Same on blue. Blue is a little bit more dramatic, lower high on price, higher high on the CVD. So we definitely also have bearish CVD divergences, which also counter the bullish one. So keep an eye on it. Besides, CVD divergences with bigger wicks have generally a lower probability. It's not that they cannot play out, because they surely can, but they do have a lower probability than the usual CVD divergences like we had at the high over here, where we have a solid high, solid structure to the downside, solid move up, bearish CVD divergences. That was beautiful. So this is a much better pivot for CVD divergences than a pivot with a very big wick. Also, if we look at the range here, then we have been going sideways and we are against resistance, right? We have the point of control where we are ranging at the moment, but that white box is acting as resistance. As long as we can't even move above this white box, we don't really have to look for moves towards the upside. Currently, we are ranging below, in between the point of control and that box above here. And to the downside, the value area low is at 42k, and then we have the support down here, which we tested once. And if we then look at the probabilities of the different scenarios, I have a little bit of a story here, but the wave structures leading up to this high over here would suggest that the probabilities are higher for this high to be a so-called fake high, or in other words, probabilities are higher. This high at the moment is a wave B or a wave X, which therefore increases the probabilities that the move to the downside is a wave C and then a potential diagonal, still too early to call, or a wave Y, which in turn leads to the probabilities being higher for this high to be taken sooner or later, which then also translates into the medium time frame probabilities that I wrote over here, which is upside. Low time frame though, when we look at this range, or basically this structure after the high, then probabilities are higher to continue this range. We're also, in the weekend, and the weekend is famous for its range. But for a triangle, I would prefer to see a bit more information. Of course, price can move to the up and the downside, absolutely no problem. But I would prefer to see a bit more structure, more information to really classify what we see locally as a triangle. In the WXY scenario here, where then we're looking for a move to the upside either in 3 or 5 ways, well, this move to the upside at the moment looks more 3-wavy than impulsive, which therefore increases the probabilities to continue ranging, or potentially a move towards the downside. Of course, continuing in a range could lead to the triangle scenario, and a move to the downside could become a potential wave C and an ending diagonal. But again, that is very, very early to call, right? Prefer to see more information. And if we look at the scenario where this is a high of a wave 5, well, in general, this being the high of a wave 5 at the moment has lower probabilities, as it's higher probabilities for a B or an X, right? And after this wave 5, we would then be looking for also a structure to the downside, but that would then be a WXY in this particular case. And this then has to be a wave 5 as well, because a WXY can't be a subdegree count of a bigger WXY. You can't have an internal WXY in a wave Y, right? However, be mindful of the resistance, right, that we have above price. We have the range here that we're in. We're ranging on the point of control. We have been hitting this white box for quite a while now, right? Testing and testing and testing this white box, acting as resistance with the value area high. If we, however, pass this area, then we still have the blue box above price, which is this one over here. Now you remember the golden box, this one is now white because we've already tested it. We were waiting to hit that box for a while, so nice rejection to the downside. But just below we have this blue box here between 44.9 and 45.3k. To the downside, however, we don't have too much support, right? Yeah, the point of control, but we're on top of the point of control. Then we have the value area low at 42k, down the white box 41.1, 41.5, and then we go to the yellow area here, 38.6, 39k. Even if I open all of my levels over here on the chart, then you can see the only level below price really here that I have is 42.9k, which is the current monthly and the current weekly point of control, right? That is basically the main area of support below price at the moment. So we have to wait and see how it reacts, if it reaches that area, the yes or the no. Locally, the range here is very, very complex to count, right? And we also have CVDs both sides. We have both bullish CVD as well as locally bearish CVD divergences. So it doesn't really make too much sense to try and count this on the lower time frames, right? I prefer to then zoom out and look at the bigger picture, which is also what I can recommend to either newer Elliott Wavers or existing Elliott Wavers. Mistakes I made in the past is that if I didn't really understand what necessarily was going on, I would go to the lower time frames and lower to try and make sense of it, but you don't. So it's best to zoom out, make sense of what is happening, what is this structure part of on the higher time frame, and then just wait for more info. We don't have to trade every wave and every move up and down, right? From an Elliott Wave's perspective, we have to try and take the highest probability scenarios, right? So waiting, very important, patience, very important, and discipline, and instead enjoy the weekend. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.